most time, like I try to get in on a pullback, so hopefully most of the time it won't go too far in the red. Like most time, if we do 10%, uh, stop loss is always gonna be 20%, but most time, 9 times out of 10, we're gonna go green. We're gonna get some green out of it. 10%, 20%, 25% is always my goal, and then the chart continues to show us more. I ride the momentum on up, but most time 25% and trim on my first 25%, 20%, depending on what the price action is showing me. And most of the time we just ride from there.
I think the other thing to add, since I just hit record, I'm gonna repeat that question, which was sometimes trades go red before green. I think the other thing is with the trades that we call, one of the things that you'll see us talk about a lot of times is don't let it go red once you got green. And so that's something I say all the time is like, even if you go up 10%, like usually that's my baseline is once I'm up 10%, worst case scenario, I'm losing. I mean, I'm going out at break even if it pulled back, and so that's something that can help you. I think that was Quentin who asked that. Yeah, Quentin, that's something that can help you too is when you get in, maybe they don't go immediately red. Sometimes they might. There's different ways you can look at it. You can always look at what we call out and maybe you wait instead of, you could set a limit order below what we got. So if we come down 5%, then it'll trigger you to get in, right? So that way you got a 5% discount or a 10% discount. Or keep in mind that once you're up 5%, once you're up 10%, you can, of course, take profits or set a limit order, a limit sell order to take you out, if it drops back down. And that way, at least if you go green, you'll never go red. Good question. I missed that play in the SPY for 545. My question is, how can I set a better stop loss on short expirations like 0 DTE? Sometimes the level may be too negative to set as a stop loss. Setting stop losses on same day expiration, I apply the same principles personally that I do in general, right? So you have to know the risk of the game you playing. And you know that with same day expiration, if the stock moves sideways for 10 minutes, you done lost some money, right? So if you know that for your stop losses, you need more wiggle room, then the fact of the matter, it might be that trading same day expiration just isn't the move for your specific strategy and for your risk level, right? So that's one thing. The second thing is with same day expiration, you have to be more precise with your entry because everything is like just there. It's a big deal. Your entry, the timing, all of that matters because all of it is amplified because you're about to expire. So you don't want to get in really pre-breakout because you're like, oh, it might break out. It might break out. It might break out. If you know you're not willing to risk the 10% minus 15% you might incur as it continues to chop around when it's consolidating before the breakout. So that's what I think, bro, is maybe trading, instead of trading same day expiration, you can trade the next expiration. Like if it's SPY, you don't have to do same day. You can do the next day. If it's Monday, just do a Tuesday expiration. Or if it's Tuesday, do a Wednesday. If it's Monday, do Wednesday, however it works out on SPY. But you got enough time where it's not like you have to go on Friday if it's Monday, but you can still catch a big move. What do you think about that, Zay? You just muted yourself. Damn it. Nah, I muted him.
All right, there we go. So same thing. If you don't feel comfortable doing 0 DCE, always try to look for a further expiration. You probably can go a little bit further out. I wouldn't tell you to go further out because the further out you go, the bigger move you need. So just don't look at a contract like just because it's cheap, you have to get it. You don't. Just try to stay close as possible to the money and at the money or in the money, really. That's how you really catch the moves that you need. Not saying that you can't make the money, but it's a better and a higher quality trade if you stay close to the money. If you buy something on Friday, go the next week out. You don't always have to stay like super close, on the 0 DTE if you get bad anxiety, stuff like that, because I know people that do have bad anxiety when they do 0 DTEs because it moves so fast. And you can get stopped out quick, and then you can go back and look at the contract and be up 100% before you even know it.
Yeah, bro. It comes with, I think, some level of experience too, to just get the feel for it.
Yeah.
And that's part of what somebody else just said. Quentin just also said he thinks the 1 minute is messing him up. You don't have to trade on the 1 minute, bro.
Yeah.
You don't. You don't have to trade same day expirations, right? So for me, I'm very comfortable on a 1 minute chart, and I'm comfortable trading same day expirations. I figured out how I'm gonna do it. And like I said, my trade today that I called out, the first one that I called, I was in for 2 minutes. I got in at 10:05 and 30 seconds, and I got out at 10:07 and 35 seconds. I was in the trade for 2 minutes. And the contracts went up 25% in those 2 minutes. And I showed the chart and how I traded it. So if you're not comfortable with the 1 minute, then you can trade the 5. You can trade the 15. You can trade the 30. Right? You don't have to trade the same way that I trade, or the way that Zay trades, or the way anybody else trades. What you want to do is, if you're using our signals, figure out whose trading style and whose call out style works best for you to follow along with and make money. And then when you're trading your own trades, then you just got to figure out what makes the most sense for you. Mm-hmm. Is it the strat? Is it EMAs? Is it just candlesticks and chart patterns? Right? Figure out what it is. If you look through my channel, a lot of my recent trades have been inside bar trades, just inside breakouts. So that's something I've been finding consistency with, and just doing it over and over and over again. And you can literally trade the same pattern over and over again. So you got to do what makes the most sense for you and your account and your style. When does book club start? Book club should be starting next Tuesday. Oh, wow, that's tomorrow.
I was just about to say that's tomorrow. Next Tuesday.
Yeah. All the people who are new to the Discord are going to realize I don't never know what day it is. Yeah.
Yeah.
Okay, not next Tuesday. Sorry, this Tuesday, tomorrow. See the book club channel for more details. We're going to be reading, or y'all will be reading, Trading in the Zone, and Avery will be having Zooms every week going over it. So the structure right now, kind of loose structure, is going to be a certain number of pages or certain chapters per week. And then, y'all will come on a Zoom. Y'all can talk in the channel about it. Y'all can come in the Zoom and then, hop on a Zoom and share what y'all took away, how you're going to use it to help you trade, things of that. Zay, I'm going to let you get this one first, and then I'll follow it up. Starting with the small account, what's a good percentage of account to risk? Then take profit at what percentage? And when do I increase the percentage? Just to give an example.
So small accounts, most of the time I always tell people 25% of your account. Really, if you want to go what they teach in stocks, you really only supposed to use 5% of your account. But if you're starting with $500, there's no way you're going to be able to use 5% of your account. So I always say 25% because you can always make that 25% back. The best percentage to start looking to take 20 to 25% every day. If you can get 20 to 25% every day, those gains will start adding up. If you can do that for, let's say, probably a week to 2 weeks, constant, nonstop, then I say after that, then you can start sizing up, get another contract. And then before you know it, your small account will start adding up. Compound gains add up quick. And that's what I love about them, because you can make $50 every day. If you do $50 every day in a month, that's $1,000 a month. That's extra income. Now you can take it out. You can go pay a bill, start back over fresh, do it again, challenge yourself. That's what it's about.
I like it. I think I'm pretty much aligned with the same kind of thinking. When you have a smaller account, and of course, everybody's idea of a small account will be different. But when you have an account that, say, when I did that account that was $78 and I took it to 1,000 in like 3 weeks, I wasn't taking trades that was $20 trades. I was taking same day expiration, and I was like, all right, kind of like what they said with the 5% stop, is that I did a 5% account risk, but I was risking the whole account. So I was finding my highest possible high probability setups as possible and taking them with a very tight stop, right? And so having that, like you said, the compounding effect is that once I get 10% or 20%, it's stacked. Now I got $100. Now I got 120. Now I got 150. Now I got 200. But now it gets a little bit easier. All right. Now I got 300. Now I got 400. Now I can take me a pretty decent swing, or I could do, some pretty decent day trades, or now I can do more than one trade at a time and give myself some more diversity in my account. So that's the way I look at it. With you have a smaller account that you're trying to kind of build up, is making sure that you limit the loss. And you can definitely take profit when you see it. Nothing wrong with see profit, take profit. It's definitely better to get $10, $50, $20 than to lose. All right. And that's kind of your main goal when you're building that small account. Your main goal should be to not lose no money, because you don't have nothing to fall back on. Right. So that's hopefully that helps Deborah. Stevie Boy, similar question. I'm trying to hold longer, but I have to cut a play after going down 15 to 20%. Then it goes up. After 2 red plays today, I got in on a spy put I called out, but couldn't hold, or that you called out, but couldn't hold it through the consolidation because you didn't want to lose my money. But of course, it bled out. How do you know when to hold and when to cut? So I want to ask why you cut down 15 to 20%. And this is something that I have everybody has different views about stop losses. I personally will use different stop losses based on different strategies I'm executing on. But for the most part, I don't exit until price shows me that my reason for entry is no longer valid. So if I'm getting in on a breakout, if I'm getting in on whatever, even let's say, for example, it's a moving average. That's something a lot of people understand, right? If your trading strategy is based off of a moving average crossover and you get in, and then those moving averages, they cross, you get in and they're going whichever way, then that's the equivalent of you trusting the strategy and not exiting until a moving average crossover the opposite way, right? Because what will happen is you'll get a pull back to the moving average, get scared, and then it'll shoot back up and continue to trend, or shoot back down when all it did was test, right? So when we enter these trades, we know that there's going to be retests. We know that there's pullbacks. We know that there's retracements, right? So when I'm looking at the chart, I'm in a trade, I'm not looking at my percentages for the most. I'm really not. I'm looking at the chart. So is my trade still legit? Yeah, it's still legit. It's just moving sideways. I'm not getting out because I know that there's about to be a move that comes, and I'm personally okay with it. And my position sizing allows for me to be okay with sitting in 15% drawdown or 20% drawdown while there's a small period of consolidation, right? So if you're in a position and you're getting out minus 20 because your account can't take it, then you need to shrink the amount of money you're putting on those trades. But if you're in a position where you're down 15% and say it's a swing, you wouldn't cut that unless it shows sign of reversing, because your whole intention behind the trade was to hold it into the next day or 2 days and see what happens. All right. So you have to trust yourself, trust your trades, and give them time to work out. For me, with the SPY one today, I got in at the top. I put the chart in the channel, what I saw, why I entered, where I entered. And the reason I didn't sell until, I don't think I called out my final sale, but I didn't sell until I saw on like a 3-minute or a 5-minute chart that it looked like we were about to reverse back up. So I held all the way through. That's when I sent that 525%. I forgot I was even in the trade. But I literally set an alert. I forgot what I think I based it on, like a candlestick high or something, but I set an alert and that was my alert to get out. And I just left the trade so that as long as it kept trending in my direction, I was good. Zay, you got anything on that, bro?
Not really. I'm gonna say that's really about it. Like, you gotta trust yourself, trust what you're seeing on the chart. My favorite saying, like I always say, trade what you see, not what you think. So if you trading, like Jordan just said, if he's reading the candles and the candles are showing you which direction it's going in, hold. If it's not breaking your level that you set for you to get out, hold it. Don't get scared. Because sometimes that's what they want you to do. They want to see you sell and then push the stop. Now, if you in profit, that's different. You can take your gains whenever. But if you red and you think it's still going the other way, wait. Set your stop loss 25%, whatever you have it at 20%, and stick to your goal. Stick to whatever you preach to yourself, and just stick to it.
That's a big thing, bro. And that's what I was explaining. I had a couple of sessions yesterday, and that's what I was explaining to some people is you have to create a plan and create strategy, create rules. You have to allow those rules to be adaptable, right? As market conditions change, as you learn, as you evolve, you have to be able to shift those things, but you have to also trust what you've put in place because there's a reason you put it in place, right? You don't have a stop loss for no reason, right? If Zay's stop loss rule is minus 20%, then it might be because Zay noticed that when he takes trades, if they go down 20%, they usually don't come back, right? That just might be his observation of himself. And then based on his observation of himself, he created that rule to protect himself from himself, right? And so we all do that. Like I said, I have a different stop loss rule and take profit rules based on whatever I'm trading and how I'm trading it. So for you, members who are asking these questions, you want to create your rules and be able to adjust them, right? Because if I've seen like maybe 2 or 3 people who said, I keep getting in trades, they go down 15 to 20% and then flip, then that means, again, one, you could easily fix that by maybe loosening your stop loss, maybe let it go 30, right? Position yourself or position size yourself accordingly, right? So don't put your whole account on there if you know that going down 30% is going to have you shaking and shivering. Lighten what you put on the trade. That'll give you the room to go down 30% if you know the stuff usually bounces. Look at the trades you're referring to and look at the chart. Does the chart show that it's flipping or not, right? Because when you look at the chart, if that's the reason for the trade, then you can see, oh, I'm down. The difference between I'm down 10% because we're bull flagging and we haven't broke the bull flag yet on my calls. So I'm gonna stay in because we're finna go crazy. And I'm down 10% because we're breaking lows and we're moving to the downside and we're reversing. So I need to cut this. All right, those are 2 different things. All right, next question, started on MIG courses. Do I get into candle patterns and strategies? Yes. I do have to go through and revamp a bunch of the courses because I've been doing all this stuff in Discord and I went back to the courses. We doing in Discord. What stocks did I play in the beginning when I started that small account? I traded all the Zay's trades. No, so I'll answer the honest, like the real answer. But I do always tell people who have smaller accounts, go look at Zay's channel and make a watch list out of all the trades that you've seen Zay call out. Any stock Zay's called out, put it on your watch list. And now you have a watch list geared towards smaller accounts. For me, when I was doing that smaller account, I was trading same day expiration. So I think a couple of them were like Amazon, mainly like Amazon, Apple. So stocks that were still volatile, or still had some volume to them, still liquid, but on same day expiration, I can get a decent contract that's 70, $80, and still be able to catch a move. If we move up $1, I can still make a good move. See Robinhood don't have stop losses. Friday sent the Robinhood stop loss article. Y'all be panic selling. I think the reason we panic sell is because we've seen plays in the past go to 0 and it's more psychological. So that's what we're talking about with having a plan, right? There's no reason you should let a trade go to 0, because you can clearly identify, short of a swing that had a minus 10% move against you the next day, like on the chart, short of that, there's no reason you should allow a trade to go to 0, because you can look at and again see, is your reason for entry still valid? All right, that's why again you set your stop loss rules. That's why you learn how to chart, things like that, so that you can see it and say, all right, I'm in, it looks good. Oh damn, hit the stop loss, I'm out, on to the next trade. All right. So you have to let go of the past as well. I understand that you might have had trades go to 0 in the past. You might have blown an account in the past. But what matters most is that you take those things and you immediately learn from them and fix them. Right. I lose a trade, I immediately pull up the chart and say, Jordan, how the hell did you lose that trade? Right. And it might be a valid loss. That's okay. You're going to have some losses. Right. But what you got to do is on the trades that you can look at and you can see, oh, I lost because it broke this trend line. And I said I was going to hold that trend line as support. It broke it. I was still up 5% when it broke, but then I held it hoping it was going to flip and I didn't trust my stop loss. Right. If it's moving sideways, what time frame do you go on to see if it's going your way? If it's moving sideways, you can see what's getting set up on a smaller time frame that's going to lead to something happening on a larger time frame. So if you look at a 30-minute chart, you might see a big green 30-minute chart, right? I mean, a 30-minute candle. But if you go down to the 3-minute, you might see that those are inverted head and shoulders that led to that big green 30-minute candle. So you can look down a time frame. You can also look up a time frame and see, hey, we're consolidating right now, but we're still moving in the overall trend. Right. And so if you look at that, you're able to hold yourself into the trade, or you can always re-enter. Right. And that's the other thing is you can see the trade, get in the trade, start moving sideways, and you can be like, well, we're moving sideways. I'm gonna take this minus 5, so I don't end up taking minus 15 or minus 20. I'm gonna take this minus 5, and then when it breaks out and I have my confirmation, then I'll get in. Zay, you got something?
That one right there, you definitely hit on the head. I was I can't even answer that one. You definitely said everything I was gonna say.
When you started your trading journey, did you only try one strategy at a time and perfect it, then learn another, or did you learn different strategies at once? It's hard for me to pick the best strategy because they all seem to work. Everybody in this group goes so crazy. It's hard for me to choose. Appreciate it. When I started my trading journey, a little lengthy, but no, bro, for me, for the most part, it's always been, let me look at this one thing, and I move quick. Like you might hear people in business say, like you need to hire fast, fire faster. You might hear that in business or things like that. And the thing is, you need to try it out so to see if it works. But if you immediately see that it's not going to work, cut it and move on to the next one. All right. There's enough different strategies to go around where you can try and pass till you figure out which one is for you. But you don't want to get stuck sitting on one trying to force it to work when it's just not for you, whether it's swing trading, different strategies, day trading, different strategies. Me personally, I'm more of I know a bunch of different strategies. Yeah, I just know a bunch of different strategies, but I've been doing this for 10 years and I've been always looking to learn different stuff. So that's why I know all these different strategies. So there's different ways I take different trades. But you can also hone in and be like Moody, who is primarily trading the strat, but he knows other strategies still. But he primarily does the strat. And once you find your thing, I don't know how many different things he tried before the strat, but now he's found the strat and he's like, okay, cool. How do I perfect this? How do I become a master at this? Because then you have that strategy that you can still apply across the board. So I would say hone in, bro. Pick one, try it out, log your trades for like 2 weeks, see how it goes. If it's a banger, it's a banger. If it's not, drop it, move to the next. What you guys say?
Same thing, but at the same time, you'll know what worked for you. You'll start feeling comfortable with what you're doing. If it don't click within the first week, scratch it. Go to the next. But you should start feeling comfortable with what you're doing immediately once you start learning like the different strategies for it. But yeah, just cut quick. Like he said, you got to be able to get off that strategy quick because if not, it's going to continue to keep forcing you to lose money. Like when I first started, only thing I traded was the same 3 stocks every day: QQQ, SPY, Apple, and AMD. So 4 stocks. Those are the same stocks I traded every day before I started homing out to other trades. Because you just want to learn, you just want to get your feet wet. So just for you to try to get your feet wet, you just want to, learn how this move, watch it for a couple of days, learn how it move, and then you continue to go from there. But don't feel like you have to force this strategy because I use this strategy. Don't feel like you have to force this strategy because Jordan uses this strategy or Moody uses this strategy. Just get what's comfortable with you and how you making money and stick with it.
Absolutely. All right. Look like we running through these. Yep, Friday is right. Thanks for the support in the chat, Friday, for sure. Like set alarms on your watch list, Devin. So I've had multiple strategies in my alarms or my alerts on TradingView, and I'll let them fire off. I think the big thing that shortened the time for me on a lot of them is back testing them. So I'll have a concept in my head, or I'll research something and be like, okay, so they're saying, look at the MACD, look at this, look at that. Okay, cool. Let me pull it up on SPY. And so I'll sit right here, and I'll maybe set a timer for like 30 minutes, an hour, whatever. And I'll go through a month to 3 months of potential past trades. And so I'll go through and say, all right, I found this strategy on Google, or all right, I made this strategy up in my head because conceptually it makes sense to me. If I took this strategy and I applied it to SPY the past 3 months, what would my results have been? And I can figure out if something's solid or not right there. Then if I had something that's like, oh, so it's an 80% win rate. Okay, the profits look like it's kind of, okay, we can try it out. Then I'll take it to the live trading, like I did like 2 weeks ago. I'll move it to live trading, and then I'll see how it performs live. Right? You can also paper trade and see how it performs, but also how it performs for you. For me, I was mad because I lost like 3 trades in one day. And I don't lose 3 trades in a week normally. I lost 3 trades in one. I was hot. So I'm like, yeah, this ain't gonna work. This ain't gonna work for me, man. Nah. Other strategies, they don't trigger every day, right? Depending on how you look at the setup. I personally like to trade every day. I enjoy trading, right? So a strategy that triggers once a week, even if it's a 100% successful strategy, I'll still trade it. But it's not going to be my sole strategy because I like to trade, so you got to go through them, bro. You got to get your feet wet, and you're going to figure out what's for you and what's not for you. And you can kind of build up a repertoire of strategies where this is your strategy for bull market, this is your strategy for bear markets. Like you've seen in my channel, I've called crypto trades. I've called scalps that last 3 minutes. I've called day trades that last 2 hours. I've called swing trades that last from 2 days to 2 weeks. Right. But the reason I can do all those and make money on all those and consistently win on all those is because I've worked through tons of strategies on all of those different things until I found stuff that clicks. And then I start applying it. Moody asks, how do you start a trading plan? Great question, Moody. So for me, I think a trading plan consists of, I think, maybe like 6 core components. Sizing, management, entry, exit. That's 4. Filter or screen. That's 5. We're gonna run with those 5, right? So filter or screen, you need to be able to figure out, based on your strategy, how do you filter out what stocks are going to be traded? All right. There's so many different stocks out there. And to be real with you, a lot of strategies don't work across all stocks. I've tested the same strategy on different industries. I've tested it on different baskets of certain stocks. And there's a strategy that'll have an 80% win rate, average gain of 5% on AMD, but on Apple, the strategy sucks, and you don't win, right? So you need to figure out, 1, how you're going to filter out those things. 2, you need to figure out your sizing based on the strategy. Swing trades, are you going a little heavier or are you going lighter? Because we're in a market that's real volatile. You can have a gap in either direction that takes you out your trade bad, right? Whereas if you're scalping, I'm in the trade for 2-3 minutes. I can go a little heavier because I'm only going to be in it for 5 minutes. Once it starts going down, I'm like, oh, I'm out, minus 3%, I'm done, right? And you can move on. You need to figure out your entry rules, right? What is the trigger? What's your checklist for entry? It needs to do this, 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 this for me to enter, right? If it doesn't do those 4 things, I'm not taking the trade. No trigger, no trade, right? You plan your trades, trade your plan. If you fail to plan, you plan to fail, right? So proper preparation prevents poor performance. They got all these sayings for this type of stuff. You got to apply it, right? So then you, of course, have to have your exit plan as well. So you know these triggers for your entry. What's your trigger for an exit? And that can be, of course, broken into stop losses and take profits. How much am I willing to risk on this trade? How much drawdown am I willing to accept on this trade? All of that stuff needs to be figured out for that particular plan and strategy, right? Because different strategies, again, have different results. So you need to look at that, look at yourself, look at the strategy, and figure out what's the time frame for all those things. Looking at how you're managing it. Are you going to utilize a trailing stop loss? Are you going to look at trimming? Are you going to say, I'm not trimming? Right? There's different benefits to trimming. There's benefits to not trimming. I had a trade that went 545% today. Had I not trimmed at 45%, you know, it would have been a different story. But it's cool because if I didn't trim at 45%, and then I went back and looked at it and it was now -20, I would have been mad, right? So there's benefits to both. You need to figure out what works, again, for your strategy and what works for you. For me, trading a same day expiration out the money, like it was like 3 strikes out the money or 2 strikes out the money when I called it lotto, trimming is smart because those gains can be gone in a matter of seconds, right? If I'm in a swing that lasts 4 months and I'm up 20% on day one, I'm probably not going to trim because I got a lot of time left and a lot of room to get on that trade. So that's the other part of your actual trading plan. And then I think the last part was sizing and management, which I might have already said, but looking at based on my account size, how am I positioning? I think I did say that. So I think that's it. I think that's the 5 things for a trading plan in my mind. Zay, what you got?
Trading plan with me, like you say, entries, exits, levels. Take profit 1, take profit 2. Like that's what I usually like to do, and then exits, because you got to be able to exit your trade too at the right plan. So you just have to play it out. Don't get scared out your trade if it hasn't hit your target. With the entries, you got to have a plan, because if you enter at the wrong time or enter at the trade already done win 100% and you go to enter, it's too late. With your take profit levels, you got to know, okay, this is a strong level of resistance. So you want to, or support if you inputs. You just got to know which way it's going. When it hits, take your profit. Don't be scared to take your profit. At least trim. I like to trim. Jordan don't like to trim. It's good though. I'm not gonna lie. Like he said, got your own benefits. All depends on how you like to trade. With me, I like to trim 25%. Always first take profit for me. That way, in case it does go back to -10%, I can at least get out that trade somewhat positive, green, break even, something like that. And then just have a clear plan always, every day, of why you trading this stock, why you entered this stock, why you exit this stock, why you chose this stock. Bull flags, bear flags, pennants, dojis. That's stuff that you need to look for. Typically on day trades too as well. I'm just looking to get in and get out. Swings, like he said, on certain stocks, swings work, and then on certain stocks, day trades don't work. Like MRO, if I know I'm trading MRO, it's going to be a swing. It's not going to be a day trade. I'm going to call it next week expiration. Walmart is something that I like to swing to as well. But sometimes you don't get to swing. You might hit 100% in one day. You take some of your profit, or you can close out the whole trade. 100% for me is, I will most likely, even if it's a swing, 100%, unless I know we have more room, I'm going to close out that trade, or I'm going to take most of my profit and leave a couple rounds. That way I know I got all my money off the table in case it does gap down tomorrow or gap up, whichever direction we in. And that's it. Exactly. I love to trade every day.
Man, one of the things I think I forgot. Well, not forgot. I think it's something we haven't even really, we don't really seem to do anymore, is rolling contracts instead of just leaving runners. like just rolling into a new expiration, because that could really be a move too. That I used to do a lot to capture more of the moves. Like it's kind of like a different form of trimming, really. To take profit on one of your trades, but then roll into another one. So you're locking in profits, but still putting yourself to capture more move if more move comes. Something I might gotta get back to. And this is the last question. It is 5:04. I said I was getting off at 5. What is your sole strategy? Maybe I missed it. Ha! My sole strategy. It depends on how I'm feeling. I know too much to limit myself to one thing. So again, for me, I've studied trading and investing for 10 years. And over those studies, I get real, I'm like a perfectionist in a sense, and a maximalist, if that's a word, where I'm like, why did this lose? I lost one trade out of 10. That's 90%. That's a problem. I shouldn't be losing. So I have different strategies based on what I feel like doing. If I feel like swing trading, I might do a profit calendar, which allows me to swing trade for maybe 2 to 3 weeks and not even really look at the trade no more. If that's what I feel like doing, if I'm taking a credit spread on it, then that's what I'll do. If I'm trying to do a shorter term swing, then I might look at trading the inside day pattern. I might look at trading a potential breakout of a flag, of a pennant, of a triangle. So I use a lot of chart patterns. I say that's kind of my main thing, just from looking at myself. I do a lot of inside bar trades and I do a lot of triangle breakouts. But I know a lot of other methods and I use a lot of them. So it's 5 o'clock. I got a meeting at 5:30. I might have to slide. Moody, you got anything, Brody? Ask to unmute. I'm hitting the unmute button, Moody. I don't know if that means you don't want to talk. Are you trying to eat?
Oh no, I ain't trying to eat. I'm eating. I don't know what try mean. You either do it or you don't. Nike, baby. What you call it? Yeah, I kind of hit it on the head, man. If I say anything, it's gonna be redundant. I'm saying I could pull up. Hold on, my guy just hit me. Hold on. Nah, bro, why you trying to do me like that, bro? That's why you laughing like that.
I'm like, I don't know what y'all talking about.
Nah, they over there being funny. But nah, man, I'm just I'm gonna tell him so I could pull up the chart, talk about SPY. I was gonna do a market overview today, but I'm just really busy. Most likely I'll get one tomorrow, but I'll pull up SPY real quick just to talk about it. It's being recorded, yeah. Or can I share my screen? I'll do it on the phone.
All right, well, look, bro, I'm gonna make you host because I gotta get ready for my 5:30. You good with that?
Yeah, that's straight. I'm not gonna be on here too long, so just a little quick. I guess I'll just do a little quick market overview real quick.
I'm gonna call you at 5:25 so you can get off the Zoom. I know you.
Yeah, bro. Nah, bro. My wife gonna make me get off. I got a whole bunch of stuff to do, and I got a grill.
Your boy I do too. I'm good too.
Oh, man.
All right. Oh, yeah, I can share. All right, then, bro.
All right, make sure you lock that recording in so we can post that thing.
All right, it's gonna go to you though, right?
Yeah.
All right, bet.
All right, y'all.
All right.
Peace.
All right, let me share my screen real quick. All right. Let me share. Oh, snap! Let me close that. Yeah, y'all gonna see Zay clowning me. Oh, I'm on the wrong thing. I gotta respond back to my boy. Hell yeah, my earring got long, my boy. Let me, I'll reply back to you in a second. Go to SPY. Yeah. Yeah. All right, cool. Let me move Zay out my screen because all I see is Zay right now. All right, so I was looking at PFE for somebody. That's what it was. SPY. Oh, let me clean my fingers so I can actually touch my phone. All right. I guess we'll just go over. We always looking at it, but I guess we'll just go over. Let me see what happened with SPY today, right? And my apologies. When I was putting it out, I was trying to chart it, right? And I think I was on a 5 minute. Could have been on 5 minutes or something like that. Where did we start? Yeah, it was a 5. No, it wasn't a 5. It was a 3 that broke it. Oh no, it was a 2 up that broke it. We was on the 5. So long story short, I know when I had put it out, I was just seeing where SPY was ranging. And I seen the 3 bar pop out, and I was just like, oh, I think we'll probably take it up a little higher. So that was my entry. Entries are always going to be white, the white line. So for puts, it was 410.63 and then 412. So as you see, SPY had came down off of, well, let's not talk about it coming down. It created a broadening formation, then it went 2 up, right? And it triggered, right? Once it triggered, you could have entered that trade, or you could have waited for the retest. And when I'm saying retest, since I'm on a 5 minute candle, I'm learning to be a little more specific when I'm using certain terminology, where the retest on this is not waiting for the next candle, right? Since you're on a 5 minute, you could have seen it relight, hit your target, hit your entry, your trigger, and then could have started coming back down on that same candle, right? So as Jordan was mentioning today, you could go down to a smaller time frame and catch a continuation, right? Because it's actually moving to the upside, right? Or it could be because we're on a 5 minute, so it's not going to be a reversal because it's already reversed, so it's going to be a continuation, right? So you could have entered that trade like that to go ahead and take out this green target right here. The green lines are going to be targets, and even the orange, the yellow ones, they're just identifying that there's a gap in between those levels, right? So even if you would have took that, you could have took out one of those targets, right? But even if you wanted to take the put, at first it's just been ranging, and then that's also why when I had put it out, let me see, because I could have sworn I said that. I just need to make sure because I'll be moving too fast. I think I told y'all that it was a bounce entry. Man, I'm sorry, I was charting too fast. Let me find another entry. Okay, the bounce. Oh yeah, see, I did. I let you guys know that there was going to be a bounce entry because I seen how it was moving along around my lines and going down to a 1 minute chart. So I just felt like it was gonna, if it came back down, like after it broke over, obviously, I felt like it was just gonna bounce. And that's what you can see. How anytime it came back down after it went back over, it just continued to bounce from there, right? So go ahead and take out those targets. And then it finally came down, and that's where I think Jordan had caught the rejection up here, that mean rejection, right? That took him to 507%. That's what he's showing y'all. He's probably thinking like 800. But long story short, yeah, it just kept going. It kept going down, but it played with both of my call entry and put entry. It played with it, right? And understand one thing, depending on the time frame that you're trying to trade on, you do not have to do multiple time frame analysis. You don't have to jump from time frame to time frame to time frame, right? Unless that's what you're trying to learn. You're trying to learn the time frame analysis, right? And it's very important to learn that, but it's also detrimental to anybody that's starting to at least just to start learning about candlesticks, or whatever strategy you also want to utilize. It's very detrimental to just learn that and then add on to your chart, right? Because whatever you start to learn, that's what you're gonna keep going to, right? So let's take SPY over to the day. I could just delete. I don't want to delete them. I could rechart. Well, let me just delete them so I can rechart it just in case somebody wants to take a picture. Because I'm not going to be talking about today. I'm going to talk about what could possibly be happening tomorrow, right? So I'm just trying to take these off. Bear with me. All right. Let me close this down. I hear that whole conversation back there. Bear with me. All right, so we went 2 up, right? Today we have chosen a direction on SPY for the market to continue upward, right? And even when it chose to go 2 up, it came back down, lost some volume, right? But it did what it was supposed to do in the strat world, right? it opened up as an inside bar. And if you was utilizing a smaller time frame to actually enter the trade, because you don't want to use the daily all the time for your trigger. We're using multiple time frame analysis. So like when we know that the daily is about to trigger, we already knew that it was about to trigger because we seen it on a 5 minute, we seen it on a 10 minute, we seen it on an hour, right? So obviously it's a domino effect. It's gonna go trigger the daily as well, right? So long story short, we went down. It was an inside bar. It triggered 2 up for entries, right? For like a weekly swing or however you would like to trade. But if you was on a smaller time frame, it took out your target, which your target was the top of this wick. So it did complete its mission. We're going through a lot of consolidation. Note that we went through a lot of consolidation right here, through a 1, 2, 3, 4, 5, 6, 7, 8 days consecutively of consolidation, just going from the bottom up. It was just ranging, going right back down, going right back up. So I'm not saying that that's going to happen again right here, but you have to note that we had a moment of consolidation right here, right? You can take it back like right here. You see how we have support right here. And look, this is very important to note. The strat gives you everything. But this is not the strat right here. This is just the post, that blue line that you're seeing right here. You can see that that's a support level. Don't you find it weird? Look how high SPY went, right? It went all the way up there, right? So let's draw a line up there so you can see something. Now I'm not even giving a market overview. I'm just charting. I put it up there so we can see how high we went, right? From this dotted blue line from right here. We came out to take out some of these highs, right? But failed to take out majority. Look, it possibly took one out because I just drew it out like that. I got to look at the price, but it possibly could have took out that first red one right here, right? But it's still consolidating and fighting through all of that. You can also see in the past that this was a support level. Anytime SPY came down here, it was bouncing, right? And you can, let me try to make it closer. You can see it, right? It was bouncing. Look at all that consolidation right there. So this is important too, right? All these weeks, every single week is important in the market. But even last week when I was saying it was very important, and this week is very important too. Why? Because if it breaks out, it's going to break out and it's going to run, right? We have the opportunity to take SPY all the way to about 422, right? To a magnitude for the rest of the week of 427. And SPY can do that because there's a lot of volatility in the market. Another thing that you got to know is that the trend is your friend. What is the trend right now? The trend is to go up. So it mind boggles me when I hear people trying to like swing puts and do this and do that because you're not going with the trend, right? Unless you're trying to just basically scout the market. That is like, even though if somebody chooses to swing a put just like overnight, that doesn't mean like they're not reading the market. That's just like more so like, oh, they understand the market. We're high, right? Like say I could go to a 3-minute chart. Well, it's not like that right now, but it's on like a breakout trade, but I wouldn't do that for overnight. But hey, we're oversold depending on what indicator you're using, or if you're just looking at candles. I feel like we're super high. I feel like we could continue to run, but I feel like as soon as the market opens, we're gonna pull back. That's trading, you know what I'm saying, what you see. You know what I mean? And trading your experience as well. So it just all depends on how you want to do it, right? So let me go back to SPY on a daily and just start marking it up for you guys. I just wanted to make you guys aware of like price action and things of that nature, right? So let's turn this off. Another reason why I say SPY has picked this direction, not all stocks picked this direction today, but SPY has, because we go to the weekly chart, we have went 2 up, right? Is noting, letting us know we're 2 up. Another thing that you got to keep in mind too, we have full time frame continuity. Reason we have full time frame continuity is because it's Monday. So all these not all the time frames, but like the weekly time frame, the daily time frame, they're all gonna have the same opening price, right? And what I mean by that is this, and the monthly, right here, the M, the W, the D, the 60, the 15, they're all gonna have is the same opening price, right? So tomorrow, things are really gonna start to move because continuity will start to change. If we open up anywhere under this candle, we're now we don't have full time frame continuity all the way to the bigger time frames, but we still have them on a smaller time frames, right? For scalps and day trade. But the bigger time frames are now it's not going to be 2 down because it's going to be the same candle. right? It's still going to be a 2 up. So what I do is I automatically put my fib. As soon as we go 2 up and I know that we can start to fail, I'm gonna put my fib on. Now I know 50% of my candle is right here, right? So let's just say I draw a line, and I'm gonna chart it up for you guys. I just wanna show y'all what I do. Like, this is what I do, like when I'm charting and stuff. I go to the daily, and now I'm like, okay, cool, makes sense. That's my 50 mark right here. This blue line, it makes sense. Look at how we ran up 50% of that candle, boom, comes back down. Look how we end up breaking it. Like I always say, if we're over 50% of the candle, we're going up. If we under 50% of the candle, we're going down, right? And I just look at the price action. I'm like, oh, okay, I like that. So basically, this is the range that I have to play from 401 to 410 if the bears try to come in, right? And I find a bounce down here to take it back up. But that's just a scenario of what may happen. I will still leave this pulled up because it's for this week, right? So now I'll go over to the daily, and I already know because it's marked up right there, but I'm gonna just do it because I know the numbers won't pop up here. But your entry for days is gonna be up there, and watch how my entries will change. The white numbers that are populating on the left, those are your entries, right? That's why I chose to like make more white lines so the numbers could pop up. So now that I've done that, so tomorrow your entry for puts is going to be 408.40. For your entry for calls is going to be 413.41. That's for swingers, right? And for people that want to trade breakouts. Now what you do is utilizing a strat is you come down. First of all, we know the trend. The trend is what? Bullish, is going up. We also have full time frame continuity to the upside. So keep a bullish mindset on a bigger time frame as you start to move down. Come down to the 4 hour. All right, now I got a 3-1 double inside, right? Staying inside of that range that I drew. Let's go down to, and also nice little pullback because we oversold. Nice little pullback to go right back oversold, right? Because this is the 4 hour time frame. So you gotta look at the RSI as what it is, a relative strength index. So if we come down over to the hour, we still have a nice, the trend is your friend. Remember we faked out a whole bunch of people right here and then it kept going? No, this is why you chart on your chart. Do y'all remember what this blue line is? For anybody that may not remember before I say it, let's go ahead and take us over back to the weekly. That blue line is our 50% retracement rule to our previous candle of last week's of what happened, right? And also note that the RSI is at a breakout trade on a weekly chart, which that is very important because if we break out on a weekly chart, we're running, right? Because we're waiting for the week to say we're on an uptrend. The day has signified that we're on an uptrend. It's been past this 50 and been bouncing nicely off the 50, right? So let's go ahead. I forgot. I think I was on an hour. So yeah, when we were talking about right here, right, fighting the 50 mark of the 50% retracement, that was last week's candle though, right? And it broke straight through that and took us up higher, right? So also I like to go back and I look at price action and see how I already know that these are all my targets. Don't this look beautiful? This is called a domino effect. If we take out these targets, automatically taking out these targets, automatically right here, this is the gap fill. It's just I deleted my chart, right? But that's where the yellow line was at because that's where I found it at on an hour. And I was like, ooh, gap fill right here. It was a yellow line from right here to right here, right? That was just like a $2 move. Boom. Once it fills that gap, it got these PMGs. Look, remember all of this? That's a domino effect. After that, there's no more targets. It's all the way up there. Look at them. Just follow this red line. See, because it's just these targets up here. So let me draw a line so you don't get confused. Oh, man, my magnet's on. Let me just do it right here. We know it's a little under that blue line. Look, I'll put it like this so you can see it. You see that? As soon as we kill that, boom. Look at our next stop. Look at support and resistance. I just can't bring this one a little down, but this candle basically, this line basically wants to stop right here. Let's make sure, since I got the magnet to do it for me. Where did I say? I was like around right here. So now that I did that, let's go back. Look at that. What I told you. I just had to have it a little higher. Once it takes out that target, that's the price action is going to stop at. And then we have this full candle right here. If we bounce over this line, we got this full candle to take us all the way to 419, right? So that's what I'm doing when I'm charting. I'm looking at past history. I'm looking at data. I'm analyzing just the data, what can happen around these levels, what happened in the past around these levels. Also, what is the setup right now? Also understanding that we were oversold and we're coming down to the 50 mark. We don't have to get to the 50 mark, but now it can reverse and go up higher, right? Because you see how when it started coming down, people thought it was going to come down. Look how it went crazy. It went down right here. Look how it went right back up because the bulls are in. All we have to do is stay over the 50 mark to continue the uptrend, right? If we test the 50 mark right here on a smaller time frame, we're going to be under here, but on a bigger time frame, it's just telling us that, hey, we're just bouncing, right? Coming down to like the 10-minute. Oh, I'm sorry. I'm supposed to be finding a better entry. I'm over here talking about the charts. Where was the hour? Entry 33.19. Definitely moving that. Entry, put entry is now right here. So I can explain myself. I like the bottom of these wicks, but also just to take this, just to use this for entry, to take this wick out for the domino effect. You see it? Those wicks right there, that's a domino effect to take you all the way to like 406, right? If it does it. But also the reason I like this entry is because this is my daily opening and my weekly opening, right? So this means that my weekly candle and my monthly candle as well go red automatically if we break this level, right? 409.12, we break this level, all those time frames automatically go red, and bears are gonna want to jump in, right? I still got my call at 413, basically high of day. I will be moving it. I just want to go to a 1 minute time frame or see, and this is what I be doing sometimes. Like people be like, I be finding entries on these small time frames. I like this to come down here, and that'll be my call entry for right now, but it'll change. Don't get mixed up with all these white lines. That's the 50% retracement, like this one and the other white line down there. If it doesn't have a number by the side of that line, that's just like a 50% retracement, or it's just a drawing on my chart. I make sure to use anything that's going to populate my levels and color coordinate them so you can know that, right? So 411.88 is now my call entry. 409.12 is now my put entry. And I'm glad that this is actually being recorded because I know that I'll tell people, but I don't want to blame myself, but I'm the one giving you the information. So I'm going to take full responsibility. Like if you're doing it on a daily chart, you got to remember that this is a daily chart. You're only going to get one candle at a time, right? So you don't want to just go off of one candle. You want to use multiple time frame analysis. Like, wait, it's triggering all of these on these time frames to keep going up. So I'm going to go ahead and take this daily for a risk, right? But you're risking the fact that that was previous yesterday's highs. Just like you see how I moved my call price from right here to down here. It's because I understand that even if we break all the way here and this triggers, we can trigger a little bit and come right back down because that was yesterday's highs. We could lose momentum. A lot of retail traders and other traders and hedge funds, they're going to take their profits right there, right? Because that's what the chart is telling them to do. Unless, and I'm talking about day trading and scalping. So let me go ahead and give you guys some targets. Now that I got those entries, I'm automatically going to a bigger time frame, right? I got those. I'm like, all right, cool. These, look, I'm gonna delete the 50% retracement, and because I got this blue line. That's all I really need. I don't know what that white line was for. Oh, I drew it for the other thing. All right, there we go. We just want to know about the 50% retracement. You see how I unclutter my chart now? Now I just got entries and now I'm about to have exits. For puts, look how fast I do it. I just boom, that's that one, that's that one. And then I look at them like 408, 408.42 to 408.02. This is SPY. That's still a good. That's still a good bit of money, depending on how many contracts you got, but that's still a good bit of profits. 406. That's as soon as I see 408 jump to 406, this right here automatically tells me to go to a smaller time frame and find me some extra targets because that's from 408 all the way down to 406. I want to be able to get out of my trades, right? Boom. And then I'll probably take this last one to not let me be greedy, right? If it goes down. That's what I tell myself. I'm still going to trade what I see. Before I go smaller time frame, I'm coming and look, I'm on an hourly chart. I'm coming straight here, boom, turn these green. Y'all literally watch, this is literally what I'm doing. But it's just, the difference is the fact that I have experience right now, and you will have the experience as well. And what I'm doing now is I use these for a reason, because these are my real targets. Once they get hit, I take them off or I leave them there because I know that they're real levels. But 413.40 is what I'm looking for, right? And I'm not looking to like tag it again. What I'm looking for is to be up higher than it on my next target. So which one is this one? 414.12, 30. I don't want that because I got 414.82, right? So I'm straight. 414.13.58. No, I don't want that because that's like a 10-cent move right after. So I got to go to these candles. 481. Wow, I'll take that because that's a 40-cent move. Remember, I just literally mentioned that. Let's delete that one. So I put two of them. I just did that. What's the next one? That was my gap fill. See, it's just I deleted my chart. I'm gonna make that. You see how I just quickly made it yellow? It's just because I know that's how I trade too, and that's how I put them out. These are still green targets, right? Now I started right here because that's the bottom of the gap. This is the top of the gap right here, the bottom of that red candle, right? And now that y'all actually online, this is the target, this green one. But when I do that, like on gap fills, that's still a good move from 14 cents to 77 cents. That's still straight, right? I'll risk that to come back down and take all my profits right here. But I want to know what's the top of that gap. Once I clean that gap, what's the top of it, so I don't stay in my trade too long. And I'm automatically going to know that because it's a yellow line, then a green line. So it's letting me know, don't be too risky, Moody. Now that I did that, I'm gonna just bring it over to like 6 hour time frame, so I don't got to go too far out on a smaller one, so I can find these targets. And this is gonna let me know how small to go. So now I'll go straight right here. Wow, 419 magnitude off the 4 hour, right? Ooh, I deleted it. I'm about to be ready. 419 right there from 416. Remember, we're gonna go to a smaller time frame to get all of these little chunks right there. And look, I'm gonna show you about price action. I don't really have to do this, but I want to show y'all so y'all can see. I'm gonna put this one right here. I'm gonna put this one right here. That was 415 I put, and then 418. 415, 418. It's going through these candles. That's not what you do with the strat. That's just a level because of the price action, but that target is not there. But watch how I make this target appear off of this candlestick. It's just because I understand price action. That's why I tell people to you want to learn price action too. I'm taking it all the way to a 7-minute chart. I'm basically taking it when these lines stop because that's where I need to go. Right here. So, but we was all the way down here. Right here. Remember, these lines are going all the way through these. And look how close they are to being my targets. Target right there, the top of that candle. Target, the top of this candle. But it was just the price action. That's how I knew it was going to do that, right? The chart don't lie to you. Like, since I've been doing this for a while, it literally just does the same thing over and over and over. So now I'm going to delete that 418. Now I'm going to delete that. I just wanted to show y'all that, right? So now what I'm going to do is, this is called a PMG. All those wicks right next to each other, 4 or more pivot higher lows right next to each other, they're gonna get knocked out, right? So I'll just go one by one. Just boom, boom. And notice, you see how I took this one and I didn't take this wick? Because it's basically right at the same kind of price, right? Then I'll take this one. I'll take this 2. I'll take this 3. I ain't gonna take that 3 because it's pretty close. I'll take this 2. Oh, come on. That's gonna allow me not to take this 2 because it's already pretty close. And that's it. And look, I just guided my way back up on my trade, guided my way back down. And then this is why I tell people, don't get confused when I just take a screenshot, because you see how look, I'm gonna go all the way to the beginning, and I want you guys sometimes to be like this. You see how you don't got all those other numbers that just went away right there? You're not gonna see those targets. Then you're gonna be like, damn, Moody, and then I send another chart. You're gonna be like, there they go. So I try to find a good, like, just to still show you a good setup of what I'm looking for. Like, I'm always gonna show you a setup. Like, if I'm being bullish, regardless of the fact, I'm gonna show you a bullish setup, and it could be bearish. It's just to like basically give you a hint, like, hey, Moody's still bullish. But long story short, yeah. So if you want to take a picture, that's it. And remember, there's this blue line, because I don't have that like as a target or anything. That's gonna be your 50% retracement rule. So me right now, I think SPY is gonna consolidate. Well, I could look at SPY right now. What is it really doing? I don't really want to look at SPY. See, it's back inside of my range. ES1. Yeah, we still good. It's still piercing on its way up. It's trying to break this 50 mark, right? On the 15-minute to go back on an uptrend. 1 hour is coming to test it. See, it still hasn't broke it. 4 hours still going crazy. I still think we'll have a bullish week. The bulls are still in place. You could go to SPY. And remember, when July came, and I was just talking about July, look, you go to this monthly chart, we're doing pretty good. All right. You want to see how we doing for the whole entire quarter? Go to your 3-month chart. We're doing pretty good. Where we at? You remember what I did? This blue line is the 50% retracement to go back down or bounce to go back up on a weekly chart, right? Now check this out. This is why time frames are so important. Come on. Right there. Boom. Now let's go find, and it's gonna make it in the blue. This is the 50 mark right here. And this is what I be doing. I'll be like, oh my God, like when I'm bored, I'll go to the chart and just be charting and going through mad different time frames. And then it tells me a whole story. I'll be like, oh my God, look, now I'm like, oh my God. Remember this 50%? Remember? And we broke straight through it. We're over it, keeps running. What the heck is going on right now? We're playing at the 50 mark. And look, it's finding a bounce. It broke, it rejected, came down, rejected, came down, broke over, found support. So it's gonna do whatever it's gonna want to do, but I feel like it's still gonna go on an uptrend. It's still got a nice uptrend still going, still gonna keep moving. That's what I feel like. But yeah, if anybody got any questions, y'all could definitely ask. I know I just, dang, bro, I don't know when to shut up, do I? Dang, y'all in the chat going crazy? Okay, cool. All right. I thought Zay was still on here. Dang, Zay, you ain't tell me nothing. Yes, sir. Thank you. Oh, Zay probably want to go get a little Zay though. What's your sole strategy? Okay, this is when Jordan was on here. The strat is such a lagging indicator. Okay. You're such a liar. You don't use the strat. Well, let me stop saying stuff like that. The strat is not a lagging indicator. But if you don't use the strat, I could understand why you would say that. The strat is, and thank you, Devin, because the strat is not an indicator. That's why I said it the way I said it, because it's like saying you know, you're supposed to put on socks with you know, you're not supposed to put on socks with slippers, right? But if you want to wear socks, you can wear socks, because there's no rules to that, right? If you want to wear socks with the slippers, you can. And that's what I love about the strat. It's the simple fact that there's only 3 ways of trading. So if you say that the strat is a lagging indicator, then you don't know candlesticks, right? Because the candlestick can only do 3 things. It can either go break the high, right? And that's the 2 up, and that's the scenario 2. And the other part of scenario 2 is it can either break the previous candle's low. That's the only thing that from candle to candle to candle that can happen in this market. Then the other 2 scenarios is an inside bar, where the candle doesn't break the previous high, nor does it break the previous low. The next candle comes out which is says in the third scenario, which it breaks the previous high and it breaks the previous low, which on candlesticks, we look at that like a bullish engulfing. The inside bar, we look at it as an inside bar, right? It hasn't broken no previous lows or previous high. And then the two is just a directional. In pattern world, it just depends on the pattern. But if you need to, bro, you could DM me, bro. I'll help you understand it. The strat shows you what's happening for entries and exits. It's not an indicator. It's facts, bro. That's what the strat is. Like, the strat helps you not guess. Let me stop sharing my screen real quick. The strat helps you not guess on what you want to do, right? It basically is letting you know what's literally going to happen in a market right there at any given second. If you're trying to trade a pattern, the pattern is not telling you what's going to happen. You could jump on after the pole hits on a bull flag, you could jump in the flag and you could just be flagging for a long time. You can flag for an hour, you can flag for 30 minutes, you can flag for how long ever it wants to flag. There's no rule for saying how long that bull flag is going to break out. But there is a rule for consolidation on how long a candle will stay inside, right? And we know that from the strat. We know seeing a double inside on a daily candle, that's the third candle is not going to end up staying inside. It's possible that it can, but more than likely it won't. It will pick its direction, right? But yeah, let me go back to the chat. I appreciate you, big bro. I wanted to call you Anthony, but I forgot. Fire Daddy. Devin, that's fire. Devon, that's fire. Devon, fire. Yes, let's go. Jones, we get 419. You might as well say we're going to 422 at that point, in my opinion. I agree with you. I'm not sure if that's Jones. Jones, is that you, Jones, or is that a different Jones? All right, thanks, bro. What do you think about AMD? I think you asking somebody else that question. Yeah, I think he's talking to. I've been training for like 4 months, man. I love that y'all really engaging with each other, man. This is how you build, and you continue to build. All right, but I'm definitely out of here, guys, because I was on here. I was long-winded. I was on here way longer than I was supposed to. I really wasn't even gonna give like a market overview because I was on my phone. I wanted to do it the proper way that I've been structuring it. But I appreciate all of y'all for tuning in. Appreciate you, Tuesday. Jordan, I'm not sure if you're still on here. Appreciate you as well, bro. And yeah, just be kind to others. Remember that you are the flow. Remember that you know what you're doing. And I don't mean like in the market, ask questions and you possibly know what you're doing, but you know what you want out of life, right? So just shoot for the moon and just know that it's gonna happen. And just be around like-minded people. And again, if you have any questions, please ask questions. Don't forget the challenge for this week. This week's challenge was to take one of Jordan's trades and take it to 10% and utilize a 10% stop loss, right? Hopefully some people did that today and was able to make them some money out the market. Again, appreciate everything that you do, Zay. And everybody remember that Zay does do the small accounts. So tap in with Zay, tap into his channel as well. Most likely today is Monday. I normally put out a watch list and stuff of that nature on Tuesday night. So if I see some nice setups today, I'll definitely put it out. And yeah, everybody enjoy their day. Peace out.